Hi all. Okay, I'm going to quickly review what my trading looked like today with the broken wing butterfly strategy. So as a reminder, here's what the broken wing butterflies look like. So you've got a kind of a regular butterfly, except one of the wings is shorter than the other. It's shorter on the side that you want to have full profit capability, what I call runoff profit. So if you're bullish, you're setting it up so that no matter how far the price goes up, you would still have some profit. It tends to work better if you're doing a bullish broken wing butterfly to have puts, and if you're bearish to use calls. It's just the way the premium expands and contracts. It just tends to give you a little bit better profile that way. And you can think of that as just like you're selling, if you're um, bullish, you're selling puts usually anyway, so that's just kind of, if you're selling premium. So it's a good way to remember it. But so the day started off with the first 3 5-minute candles. Again, I always look at the 5-minute candles just to find my trade entry. So you've got your first 3 candles here, which is considered the orb, the opening range, and we broke below the orb and then came back up. And I guess this is what I would consider kind of a retest with an okay candle, but I always look for a decent bearish candle in this situation for entry, kind of a longer one without much of a wick underneath, showing just good downward momentum. So here's where I did enter a bearish broken wing butterfly. It wasn't the best bearish entry candle. It was like I've got a little bit of a wick there. It's kind of an engulfing candle, but it's still not the best. So I used discretion and just I entered that, and it was looking pretty good up until we got to around here, and then this candle almost just startled me out, but it went back down. Once we got to here, I ended up exiting the trade at a negative 150. Again, I talk about these trades in one lot sense. So like 150 for a one lot is my exit plan for sort of a manual stop loss. So it got up to here when I got out, and that just kind of shows you the flexibility initially of the broken wing butterfly, where it can go all the way up here before I hit that. So got out there for a relatively small loss, which is part of the trading plan. If I had a plan where I was just waiting for the trade to just play out and I just let it go, I mean, you've got a max loss of close to 400 on that. So if I would have done that, probably, if I would have just left it, it would have ended up at max loss or pretty close around here, which is just, for my plan, it's just not good risk management, because if I take that, then it would take me usually quite a few trades unless I get one that I really pinned like right here toward the end, in order to make up for that loss, which is just not the way I want to trade. So got out here, and then with my trading plan, it allows for, on a loss, one more butterfly if I get a good entry, but I have a even stricter stop loss for that. So usually if it hits around a 50 loss, I just get out and then call it a day. So then that ends up being like a 200. And of course, I rarely get out at exactly that amount. Like it usually ends up being a little bit more than that, but that's kind of my trigger. So I watched and saw that we came up and kind of broke this structure here, so I considered this like not really a higher high and then pullback structure, but it was more of like this was a condensing area, a squeeze. And so when we broke out of that, then I waited for a retest, and then I got in about right here. But I structured the broken wing butterfly on that so that the center point was actually at the 6890. So this right here, this line was actually the center. Let me review that. Oh no, it was 6895. That's where we were. So right here. Yep. So this was the center, 6895. So I watched it move up, and it was a pretty comfortable trade all the way through. And then toward the end of the day, it started to drift back down, which is what I like. That's starting to look perfect for this kind of trade. When it got right at the center line, I mean, this was like very, very close at the end of the market. And when we get down to there, I do switch to the 1 minute just so I can really see like where the movement is. So we had, this was a spot where I almost got out because we were at 10 minutes left until market close. It was looking like it was going to keep moving. And so once we get to this line at that point, that's kind of like where I would end up not taking profit. So I watched it and it started going up again. So I thought, okay, I will just try to stick it out. I don't like to wait until the last minute and really get a pin at that middle point because I mean, that would be great. It would be the maximum profit, but you can see where it sometimes will take a big jump down, and then you can really risk just getting into the negative very fast at that point. And so I got out at about here. Just saw it starting to go down. I didn't want to risk it getting like closer to having no profit. So I got out, and for the day I ended up about 150 ahead for the entire day, and taking the 150 loss on the first butterfly, that's actually quite good. So and then you can see if I had just like let it play out all the way to the very end, I would have gotten almost no profit because it would have done this big candle down, and then this is where the zero break even would have been on this bottom side of the butterfly. So it was good that I got out here. The only time I'm ever going to really completely pin it here at the at market close and get that max is if it's just trickling down in the very last couple of minutes from the upside. If we're sticking around here in that upside where I'm not close to this negative zone, and if it just happened to trickle down and then its last bit at the very end, and I keep an eye on it, those last 5 minutes, about 5 to 10 minutes is the only time where I really have to kind of keep an eye on that. So I'm kind of like, nobody bother me then. But if it did trickle down and then it made its last spurt downward in the very last minute and touched the middle, that's the only time that I would end up taking that full pin profit. Otherwise, If it's in the last like 10 minutes and we look like we're kind of heading down into this area, I just want to get out and not risk giving away all that profit in like a 1 minute jump. So anyhow, not that bad of a day. Would have been nice if I wouldn't have gotten into this one at the beginning, but I guess that's how it goes. So, and again, here's what the risk profile looks like for that bullish trade in Optionsmith. Makes it really clear, and you can see real time what your profit and risk profile would be and at expiration. But I find for 0 DTE, I tend to look at the at expiration profile the most. So that's it.